These past few years, even if you are not into crypto trading, you must have heard words like Bitcoin or Ethereum. Online, people keep talking about things like blockchain, decentralization, and mining. But for many people, after reading about it for hours, it still feels confusing. So today, let's make it clear. No jargon, no circles, just plain words that everyone can understand. Hello, I'm Hao Yu. Let's start with a simple question. The numbers you see in your bank account, do they actually count as money? You can't eat them, you can't drink them, and you can't even touch them on the screen. But you can use them to buy groceries or pay rent, simply because people recognize their value. A shop accepts those numbers because they believe others will also accept them. But this belief is backed by something called national credit. The government sets its money, so everyone uses it as money. In finance, this type of money is called fiat currency. It means if the government sets its money, then it is. But this system, relying entirely on government credit, has some problems. The biggest problem is too centralized. The banks and the government are the ultimate authority. Take China in 2022, for example. A new rural bank in Henan province literally froze people's deposits. Tens of thousands, even hundreds of thousands were locked away. Customers couldn't withdraw a cent, and if you tried to post about it on social media, your message could get censored. Some people who went to protest even got beaten up. Think about it. Your money is sitting in your account, but with just one word, the bank can stop you from accessing it. Another problem is that fiat money can be printed endlessly. The government says it's saving the economy while flooding the system with new money. On the surface, it looks like they are helping you, but in reality, they are diluting the value of the money in your pocket. The more money they print, the higher prices rise, and soon your salary can't keep up while your assets shrink. Basically, you work hard, but the printing press quietly drains your wealth. To put it bluntly, you are being harvested, and you don't even notice. For example, in China, over the past decade, the money supply just kept growing. Back in 2013, there were about 110 trillion RMB in circulation. By 2024, that number had jumped to over 290 trillion, more than double. And when there's too much money, the prices of goods and services naturally go up. So, when you go to the supermarket or when you buy a house, you notice that things keep getting more expensive, but your salary never catches up. This invisible inflation is slowly eating away at our purchasing power. So people started wondering, is it possible to create a kind of money that doesn't rely on banks or governments, works globally, is recognized by everyone, and can't be tampered with? In 2008, during the financial crisis, someone with the username Satoshi Nakamoto invented Bitcoin. He proposed a brand new system built on one key idea: decentralization. The mysterious Satoshi has never revealed his identity. He only showed up online a few times, then disappeared. Some people believe Satoshi isn't a single person at all, but a group of cryptography and computer experts sharing one name. You can think of Bitcoin as a ledger system that nobody controls. This system is called blockchain. Every single transaction gets recorded in a public database. Everyone can see it, and nobody can change it. It's kind of like keeping a notebook for groceries at home. Each time you buy something, you write it down. But not only you, your neighbors and your friends all copy it too. And every time you update it, everyone's notebook updates at the same time. For example, if I send you one Bitcoin, tens of thousands of computers all over the world record that transaction. If someone wants to change this record, they'd have to hack all of those computers at the same time, which is practically impossible. possible. That's why this ledger is often called an unchangeable truth. So, who maintains this system? That's where mining comes in. Mining basically means using computers to perform calculations, helping the Bitcoin network verify transactions and keep the ledger safe. The more you contribute, the faster you compute, the more rewards you get in Bitcoin. You can think of miners as workers hired by the system. They contribute their labor, and the system pays them. And here's another key point. Bitcoin has a hard limit. Only 21 million coins will ever exist, not a single one more. So, when more and more people believe in it and demand goes up while supply is fixed, the price naturally tends to rise. That's why many people call Bitcoin digital gold. The first time Bitcoin was used in real life was in 2010. A programmer bought 2 pieces with 10,000 Bitcoins. Back then, 1 Bitcoin was worth just a few cents. Today, 1 coin is worth over $100,000. So, those 2 pieces are now worth nearly $1 billion. It sounds like a joke, but it's actually the story of Bitcoin's crazy price history. What's interesting is that China used to be the center of Bitcoin. Between 2015 and 2020, over 60,000 of the world's Bitcoin mining power was in China, especially in Sichuan and Inner Mongolia, where massive mining farms ran thousands of machines, powered by cheap coal and seasonal hydropower. But in 2021, China classified crypto mining as an industry to be eliminated and shut it down nationwide almost overnight. Mines closed and tons of machines were sold abroad. But blockchain's value goes far beyond just money. It can actually solve one of the biggest problems in the digital world: ownership. Let's take your phone for example. So you take a beautiful photo of your kid at the park. Of course, it's your photo. But once you post it on social media, it can be copied infinitely. You have no way to prove which one is the original or which one truly belongs to you. That's the biggest issue with the digital world. Digital files can be duplicated endlessly, and ownership can't be confirmed. Blockchain fixes this. It can give your photo a unique digital fingerprint, verified by the entire network, and impossible to tamper with. This is the logic behind NFTs. So the meaning of blockchain isn't just creating new coins. It's creating a brand new way to confirm ownership, not just for money, but for images, videos, code, even IDs and contracts. All of this can be anchored on-chain. Of course, Bitcoin was only the first blockchain application. Later came Ethereum, which goes further. It's not just money. It can also run programs. You can think of it as a programmable Bitcoin or a smart contract platform. On Ethereum, people have built games, financial apps, lending platforms, leading to many new types of tokens. Then there are stable coins like USDT or USDC. They are pegged to the US dollar, mainly used for payments and trading. In practice, they feel like PayPal or Alipay, fast, cheap, and easy to transfer. They are not fully decentralized, but they are very practical. Now, let's talk about blockchain's evolution itself. Bitcoin's chain was very simple, only able to process transactions slowly. Ethereum add more features, but still struggle with construction and high fees. That's why we now have newer blockchains like Solana, Avalanche, and Polygon, all aiming for faster speeds and lower costs. Some use sharding, splitting data into smaller pieces that can be processed in parallel, kind of like opening multiple checkout lanes in a supermarket. Some use sidechains, offloading work from the main chain onto an auxiliary chain. The main chain ensures security, while the sidechain handles speed. It's like having a service road next to a busy highway. Others use zero-knowledge proofs. In simple terms, it lets you prove you have the right to do something without revealing who you are or what you know. For example, you want to enter a room. The system only needs to know you have the key. It doesn't need to know your identity. It's like having a very proper English butler. He only checks if you hold the secret key. If you do, he opens the door and serves you without asking who you are. This technology protects privacy while keeping things secure. It's widely used in privacy coins and identity verification. All of these innovations are designed to make blockchain run faster, safer, and cheaper. So today, when you use the blockchain blockchain wallet, buy an NFT profile picture, or play a blockchain game, all of that is powered by these new technologies. You could say blockchain is no longer just a tool for making money. It's becoming a technology that's gradually rebuilding the foundation of the internet. But be careful, this industry runs deep. Crypto scams are everywhere. Some projects look super high-tech on the outside, but in reality, they're just pump and dump schemes. You see aircoins, Ponzi-like projects, crazy price swings, and if you don't really understand what you're doing, chances are you end up with nothing. That's why if you really want to get involved, the first step is to understand how it actually works. Don't rush in, don't get greedy, learn more, watch carefully, avoid the traps. Now, let's talk about regulations. Since 2021, China has completely banned crypto trading and mining, and that hasn't loosened up at all. But, and this is important, while crypto platforms are banned, blockchain technology itself without token trading is actually encouraged for research and application. For example, supply chain tracking, China's central bank digital currency, and government data online. Meanwhile, things are very different in Hong Kong. In June 2025, Hong Kong rolled out its Digital Assets 2.0 policy. This policy openly promotes stablecoins, tokenized real-world assets, blockchain-based bonds, blockchain ETFs, and even turning renewable energy like solar power into tokenized assets on the blockchain. What does that mean? Imagine you can buy a token that represents part of a solar power project. Just like buying stocks, you use your crypto wallet, make the purchase, and later you can sell it anytime. If the project makes money, you might even receive dividends. Compared with traditional financing, it's more efficient and it opens the door for regular investors to join in on green energy investments. And starting from August 1st, 2025, Hong Kong officially launched its stablecoin licensing system. That means only licensed platforms can legally issue and operate stablecoins. But there's a catch. Hong Kong enforces strict regulations. Stablecoin issuers must conduct KYC. That means real name registrations plus identity checks for every token holder. Some in the industry worry this could affect privacy and slow down adoption. But KYC also makes transactions more secure. Investors still have strong confidence in Hong Kong's market. In 2025 July alone, several fintech companies raised over $1.5 billion to build businesses around stablecoins, blockchain payments, and RWA, focused on stablecoins, blockchain payments, and RWA projects. I know for many people, all these terms sound complicated, but if you treat blockchain as just a new tool, it's really not that mysterious. If you are the type who enjoys learning new things, this is definitely a field worth paying attention to. And honestly, I make this video not just to explain, but also to remind you, blockchain and crypto are developing at high speed. Money keeps flowing in, the industry is growing bigger, and new opportunities are opening up, especially Bitcoin. It's still the leader of this entire space. The earlier you understand it and get involved, the more likely you are to catch the upside. Even if you don't have much money now, buying just a little fraction and holding it isn't a bad idea, because 10 years from now, Bitcoin could be worth much more than what you see today.